morning, and welcome to Investment Talk TV, brought to you by the award-winning advisors at Legacy Wealth Management. And now, with the latest information on the stock market, your investments, and retirement opportunities, here are Legacy Financial advisors Paul Meyers and Brady Brunsvold.
Good morning and happy Easter. Welcome to Investment Talk TV. I'm Paul Meyers, LPL Financial advisor at Legacy Wealth Management. A few weeks ago, we broadcast an episode featuring Lise Kruse, North Dakota State Banking Commissioner, and it was very well received. So we decided that we would rebroadcast that episode this week. So sit back and relax and enjoy another episode of Investment Talk TV, brought to you by the advisors at Legacy Wealth Management.
Hey, good morning. Thanks for having me yet again.
And that is Brady without the beard. That's a good thing.
Finally, first of spring, it shaves it off.
Yeah, and probably take another couple of days and grow it all back again, right?
Won't take long.
Yeah, that's good. Hey, today's show is going to be jam-packed with some interesting things, so we don't want to wait too long. It has been an unbelievable week, really an unbelievable couple of months in the market, up and down and up and down. We're going to talk more about that, but today we have a special guest on our show, Lise Kruse, who is North Dakota's banking commissioner. She's technically the commissioner of North Dakota Department of Financial Institutions. We sometimes just call her the banking commissioner. She's going to be zooming in live from a conference that she's attending to share. She's sharing some of her thoughts on the banking situation in North Dakota and nationally. That'll be good to have her on board with us today. So you want to stay tuned and listen to that. What else, Brady? We got some other fun things.
Yeah, for the month of March, it's been designated Legacy Pet Month. So we have some pictures of pets that people have sent in over the past few weeks. Of course, our company mascot Lucy also included in that. And then we're also going to talk a little bit about what happened in the stock market and take a look at the stock market we can review if we have time at the end of the show. So,
like Brady said, before we get too deep into the stock market, which is really why we're here today, we want to take a look at the pets who've made Legacy a fun place to be. And we invited some of you out there to send pictures of your pets. And what do you know? Lo and behold, you did. And we picked out a number of those, and should be kind of fun to take a look at those. We're going to showcase some of those furry friends today, just because I guess that's the kind of place we are. Yeah, right? We should. Who have we got first up there, Brian?
It looks like the first one is Pet Lexi. From what I understand. There she is.
She's a border collie.
First up, 9-month-old border collie. Just a youngster named Lexi, sent in from Bob Iverson. Looks like somebody's happy about the snow, huh, Paul?
I think so. Next, we've got a Boston Terrier named Barney, sent in by Bruce Johnson. Quite the distinguished gentleman looking. Look, he's got his paws crossed and the whole deal. Kind of fun. How about Ernie? What do you got there?
The next one is pets Bert and Ernie. This one comes from Joyce and Bill Nerdall with a special message for Lucy. We hope you had a happy birthday and got lots of dog treats from your dog friends, Bert and Ernie. How sweet.
Well, we've got another one, a cute pair from Lisbon, sent in by Nancy Fromke. Gus is a Heinz 57 mixed breed dog, and Lucy is a mini Aussie. I never heard of that before. That should be quite fun. Look at that duo. Look at the face on those cute little pupsters. Pretty cool. Brian?
The next one is Pet Snook or Snooky, a 6-month-old kitten named Snook from Devil's Lake, sent in by Joe Kostecki. Snook says, "Happy birthday, Lucy." We almost forgot about that, didn't we, Paul?
Snook and Joe are both big fans of both the radio and TV, and I know that they get a chance to watch and listen every Sunday, and we appreciate that. Finally, we've got a little lapdog named Willie, sent in by Kathy and Ron Wolcher. Willie looks like he could be Lucy's cousin, don't you think, guys? Look at that.
Yeah, look at that.
What a face on these dogs. Well, anyway, it's a treat to have these pupsters on board. I guess we have another one, don't we?
We have a couple more.
Who have we got there, Brian?
Looks like we have a little pup that was sent in by Bob Ward. There's a nice, healthy-looking dog. What do you say? What do you think, Paul?
What's with the green grass, though?
Yeah.
Where are we getting that one from? Apparently that puppy likes to play fetch, and that's why we got the orange ball in there. And then, you know what, Brady and Brian, we know you guys have dogs and other pets out there. So here are some of the legacy pets that we have going out there. Lucy and Remy and Tinkerbell.
Oh, yeah.
That must be one of yours, Brady.
She's bloodthirsty, yes. She only has one tooth left, but if she had teeth, she would be bloodthirsty.
And Joey is, of course, Kay's little dogster. And Cat, that must be yours too, right, Brady?
Pickles the cat, yeah.
Pickles the cat.
And how about Charlie and Coco?
Charlie and Coco, a couple bird dogs that run all over the house.
So you've got 73 dogs at your house. Is that right, Brady?
3 dogs and 1 kitty cat.
And some kids.
And 4 kiddos.
Well,
Would
very
it be fair
good.
to say you have a full house, Brady?
It is busy.
Let's get back to Legacy Wealth Management's investment talk and what's been going on in the market. Let's take a quick look at what's been going on in the market because we said it's been a pretty wild week, and it has. And you know what? I know that our viewers like to kind of get our take on what's been going on. You may remember, guys, it was Wednesday that Jerome Powell and the Federal Reserve came out with a pronouncement, and for a while the market was doing pretty well. I know Friday of last week, a week ago, the Dow Jones closed at 31,861. But boy, it had a turbulent ride since then.
Yeah, Monday we finished at 32,244. Tuesday went up a little bit more at 32,560. And of course, at Wednesday, there's a lot of optimism prior to that, up and down, but we did peak out at 32,761 before Debbie Downer got on the TV and started talking. I'm sorry, I mean Jerome Powell. And he got on the TV, started talking, and we saw that drop off at the end of the session to 32,000 even, roughly, or 32,030 specifically, which is a 730-point swing just on Wednesday alone, which is a major bit of volatility. And that, of course, comes from the uncertainty that we see with that.
Well, that was quite a week, and we watch it pretty closely at Legacy. We just wanted to kind of give that as a brief view of what's been going on in the market. Hopefully, towards the end of the show, we'll have more time to talk about some of the things going on in the market. It was nice to see, I know, guys, we watch it pretty closely, nice to see that on Thursday and Friday of this week, the markets were a little more calm and showing some more positive things. A lot of people think that we may be done with interest rate hikes. What do you think about that, Brady? You think that's likely to happen?
Well, I think that if there are any more, they still said there's a target of, around 5%, which would leave room for 1 or 2 more 25 basis point hikes. So I think there is still a possibility of 1 or 2 small hikes. And I think that's more or less expected. It is frustrating, and I refer to Jerome Powell in somewhat of a negative sense because I think that, yes, he's tried to, fight inflation. He's missing some key components like the money supply, which we talked about before. Mm-hmm. But I think he says, too bad, whatever happens to the economy, we're going to fix inflation. And, his talk on Wednesday also kind of hinted at they expect, GDP to not be so hot. They expect the third and fourth quarters to not be so good. And that's as a result of what they're doing right now. So it's like he sees it coming and he still doesn't care that that's a consequence of what they're doing. That's just my take on it. But I do think that there's probably 1 or 2 more hikes yet to come. Maybe just one. Hopefully, we'll see.
Yeah, I tend to agree with that. I think there's going to be one for sure. That would be at the next Fed meeting in May, and possibly another one in June. We'll see, Paul, but more to come.
More to come, and we're going to keep monitoring that at Legacy Wealth Management. And if you've got a question or a concern about your investments, your retirement plan, or any of those good things, you can always give us a call at 701-365-8083 or send us an email at team@legacywealthfargo.com. And, the reality is no obligation. You don't have to sign up for anything. If you've got a question, we're happy to talk to you, and we'd love to help you. In fact, we had some great opportunities this week. We got a chance to speak before some members of the medical profession and just to answer some questions about what's going on in the markets and what they might be interested in and how they might impact their 401k plans and other types of retirement. So if you've got a question, we'd love to talk to you. Big on the list of discussion points for the Federal Reserve this week was the situation that's been evolving with what some people call the banking crisis or the banking situation. We don't really view it as a crisis. We've got a great banking system in this country, and it hit a few bumps here in the past week. One of the big catalysts for the economic crisis of 2008 was the implosion of the Lehman Brothers banking facilities, and lately some people think that some banks may be falling into that particular path again. We don't necessarily agree with that. So we brought in someone who we would call an expert on that, and we mentioned that someone is Lise Kruse, the North Dakota Banking Commissioner and the Commissioner for the Department of Financial Institutions. She joins us today from a conference where she is talking and meeting with some of her other counterparts, and there she is. Good morning to you, Lisa. Nice to have you on board with us.
Good morning, and thank you for having me.
Yeah. It's always kind of fun when we get to have an official from North Dakota state government on our show with us. And Lisa, we've just got a few questions for you. And let's start off with some easy ones. Let's talk about your background, where you came from, how you came to be in this position, that kind of thing.
Okay. Well, so I am originally from Norway. I came to North Dakota via going to Concordia College for college. And then I met my husband, and he was not as adventurous. So he just moved from Fargo to West Fargo. And that's where we still are. And I started out, I worked in the insurance industry for a while, but then 19 years ago, I started working as a bank examiner for the Department of Financial Institutions, and went through, examined banks, became the chief examiner, and ended up as the commissioner. And what is interesting is I love history, and our department started actually in 1887 before
Wow.
our state. And so we're responsible for oversight of our state charter banks, credit unions, trust companies, and all the non-bank entities that provide financial products and services in the state of North Dakota. So it's a great place to be.
Well, very good. That's a pretty good explanation. I think it's great that you originally came over from Norway and you found a good place here in the Fargo, Moorhead, West Fargo area, and you went to Concordia. That's a good sign. We have lots of Concordia grads who we get to pay attention to. We know some of the problems that the national banks face, and we also realize that your department is not necessarily supervising those federally chartered organizations. And many people might say that the problems that those banks are facing are different from the problems that North Dakota credit institutions face. Let's take for a second and maybe try to describe what happened in the banking system over the last couple of weeks. There were banks like the Silicon Valley Bank and Credit Suisse, and any insight you can share with us and our viewers on what's been going on in the banking system.
Yes, of course. And I want to first say those banks are very different than the banks we have around us in North Dakota. So what happened first? Let's talk about Silicon Valley Bank. Really, the number one thing that happened was there was a loss of confidence by the depositors. So there was a run on the bank. And one of the reasons why they had that run, because they had over 90% of their deposits were above the FDIC insurance limit, so which would be considered volatile. And they were very concentrated with their customer base. They were not diversified at all. They were concentrated in one industry and higher risk customers. They catered to startups and high tech venture capital firms. And when there was a downturn in the tech industry with lots of layoffs, the customer base was negatively affected. And when you look at, so I've gone back and looked at their balance sheet, and the bank grew very fast in the last 3 years. They kept on growing very fast, and then they had a very mismatched balance sheet. So their funding source were short-term deposits that were volatile and uninsured, and they put those deposits into longer-term investments. So when the interest rates started going up and the venture capital started going away, the bank needed new sources of liquidity. So they started selling off their investments. And that's when the customers got nervous and they just lost confidence in the bank, and it was a run. You mentioned Credit Suisse. That is a little bit different scenario. That bank had experienced a lot of turmoil for a while. They've had a lot of turnover at the executive level, started experiencing some sell-off of shares a couple of years ago, and posted losses in 2022. And I believe they actually started losing depositors fourth quarter of last year. So they've had more of a run. But when there's one bank that goes down, we are not in a vacuum in the banking system. I believe the Swiss authorities realized that they needed to do something to make sure that bank didn't fail as well, because that was even larger than the California bank.
That's a very good explanation, and very interesting to hear about that. And I think the interrelationship of banks is also very important. And I'm going to buzz back to you on that for a second in a minute here, Lisa, to talk about the interrelationship of banks. But I wanted to throw this back to Brady and Brian for just a second, because one of the things we try to do at Legacy is be aware when a certain sector gets beat up, because what happens quite often is we see some bounce back, don't we, guys?
Well, especially if you look at, the regional banking sector as an investment fund, there's a lot of ETFs that focus on that. Really got hammered on the wake of the SVB, catastrophe or whatever you want to call it. But they have since then bounced back. And a lot of that is thanks to the FDIC or the feds coming in and say, hey, listen, we're going to cover all of these deposits above the $250,000 FDIC mark. And so I guess my question, when it comes to the government helping in or stepping in to help, is that bailout? Is that safe? Is that a normal chain of events that they do to help stabilize? Are there negative repercussions of that when all these other banks, regional or otherwise, say, hey, listen, I want to cover all of my creditors up to $50 million or investors? And I feel like that's not a really good precedent that we want to set across the banking industry. So I'd love to hear your viewpoints on that.
Well, I believe the government has had a long time history of intervening to stabilize the financial system and our banks. And I think the most known is, of course, establishing the FDIC after the Great Depression. So deposits are insured, but they put measures in place in the last crisis, 2008, 2011, and now again they are stepping up to ensure their stability. It's quite a hurdle for the federal government to get to that point where they intervene. So for instance, what happened a week and a half ago, those measures have to go through the Treasury, the Board of Governors of the Federal Reserve, the FDIC board, and the White House. There's a lot of people involved before they make those decisions. And I think there's a lot of information that goes into those decisions that are not always out in the media. And I believe that, I know that Sunday I was nervous. I didn't know what Monday would look like because even though as a customer, your deposits are insured, but then you still might worry. And in North Dakota, we just haven't seen any of this instability for such a long time. So, but I still kind of wondered. I'm hoping that our customers realize that, so we don't see any effects here. So, the government has a history of stepping in, and I just. Whether I don't want to pine on whether it was the right thing to do. I think Monday showed that it helped for sure.
It does help, and Lisa, those are good explanations, and it is normal and right that the government should step in when necessary. That's one of the legitimate purposes is to kind of keep things operating on an even keel. Brian, I know you've got some things to add to this.
Yeah, I got another question. Thanks for coming on the program today, Lisa. You mentioned one key word that I want to kind of zero in on, and that was instability. And do you think we can expect to see more instability in the banking sector, especially if we see further interest rate hikes like we talked about earlier in the show?
Well, I think the instability here was caused, and the bank failures were caused by run-on banks with banks that had very unique business models. I don't believe those banks represent the banking industry as a whole. So far, we're not seeing anything unusual, and a lot of monitoring is happening right now. I believe after, the Friday when that bank failed, I worked over the weekend and pretty much 24/7 since. And as of now, everything is stable here. But in the last week and a half, I have had daily meetings with all my counterparts across the nation. So it covers all the states and all the territories. And then I've been meeting regularly with my federal counterparts, so the FDIC and the Federal Reserve, and we compare notes. We talk about the system as a whole. What are people seeing? And so far, it's stable. We're not seeing a lot of deposit fluctuations, and we're watching it very closely and ready to put in measures if we have to. But so far, we've not seen anything. I've contacted our banks, and everything is fine, because I think at least in North Dakota, our banks are just built different. They have a different business model, so it doesn't really compare to what they saw in California and New York.
I think that's good news for our listeners and our viewers to hear about, that the bank model in North Dakota is a little bit different. Does the Bank of North Dakota, which is an unusual element around the country, kind of one of a kind, does that weigh in, get involved? Does that help stabilize the North Dakota situation?
Yes, I believe so. Because Bank of North Dakota functions as a banker's bank, they are a partner to our community banks. So banks have credit lines at Bank of North Dakota, and because Bank of North Dakota is right here, they know the bankers, they know the communities they operate in, and so they have a good understanding of any risks that are facing any of our banks. So that gives them a really unique ability to assist when there is a crisis because they know the environment and they have just the best ability to respond. So it's timely and what we need at the time.
Tip,
And over the years, they've always stepped up.
Typically, the FDIC insurance for many of these banks is running in the neighborhood of about $250,000 for cash deposits at a bank. Would it be kind of in conclusion, Lisa, that you'd say, you know what, people in North Dakota are probably pretty safe with the banks we've got?
Oh, absolutely. Because so banks and credit unions, where they differ from what you see of the large banks or Wall Street banks, is that they are relationship focused. They're community oriented. So the customer base is stable, and the customers are usually loyal to their institution. Uh, and when you think about the uninsured deposits, so I mentioned Silicon Valley Bank had over 90% uninsured. In North Dakota, many of our banks don't have anything that is not insured. And, our largest bank had put on their website that their ratio is 90% insured. And that's one of our larger banks. So here we had the opposite of what Silicon Valley Bank had. And also our banks are more diversified. They're not concentrated in one area and conservative risk management practices. And I think it's important also to point out, I mean, we haven't had a bank failure in over 30 years. So they know their customers and they know how to serve their communities and they don't take risk and I also will say, as the banking commissioner, I always feel very lucky to be in North Dakota because we can work together. I feel like we have good relationships. So when I have information I need to give the banks or things that they need to look out for, I have the ability to get their ear and share that. And our oversight and I think has been really helpful here.
I think that's really very reassuring to hear from you, Lisa. It's a good thing to hear.
Yeah, I have one last question, and you kind of mentioned how banks locally are much more conservative than, say, Silicon Valley, for example. Based on what they see happening with these other banks, of course, we're more conservative. Are there actions that they're taking to become, more conservative? They're trying to avoid certain pitfalls because of this, or because they've been doing the conservative thing, they haven't invested the wrong way, et cetera, that they don't have that much of a change in their operations plan because of this?
Um, I think our banks are very well positioned to weather a lot of storms. I don't think any bank can weather a run on the bank, but I would say that one thing that happens in the regulatory environment after every crisis, the government will overcorrect. So there will be new things that the regulators, as myself, we work in conjunction with our federal government, but things that we are going to look at. And I think one of the things that have been kind of shared now with industry, and that I think industry and the banks are looking at, is to make sure they have enough liquidity, and that those liquidity lines are tested. If they have a line with the Federal Reserve, to make sure it's available. And I think that might be that some of our banks might prepare on that, but on an ongoing basis, we have always said that you need to test those lines and need to have it available. So I don't think it's anything new, but I think some of our banks maybe think a little bit more about it. And but so far I think they're watching their customers very well. I know some of our banks have put stuff out on Facebook or LinkedIn, or they're communicating to their customers if they're worried about the deposit insurance. $250,000 is the starting point. So you
Yeah.
can structure that different ways. So the federal agencies like the National Credit Union Association has a calculator, or administration rather has a calculator, and then FDIC has a calculator, and also you can go to your bank and they can help you structure that so that you can have more insurance
Very
and make
good.
sure that you are protected. And I think that's what our banks, I think, have been pretty proactive, reaching out to their customers and
Very
making sure
good.
that they feel
Lisa, you
confident
bring
in the
up some
bank.
great points. You bring up some great points, and we really appreciate having you on the show. And we're going to put you on the spot and ask if maybe we'll be able to get you to come back again at some point down the road. Would that be good?
Yes, of course. Thank you so much for having me. I really appreciate the invitation.
All right. Lisa, thank you so much. What a thrill for us to be able to have Lisa on board with us, director of the financial institutions here in North Dakota, and supervises an awful lot of big things going on in the state of North Dakota. Of course, one of the things we do at Legacy Wealth is we talk about some alternatives that you have if you need to put your money away, and if you're looking to store more than the $250,000. We've got a number of solutions there. We had an interesting time this week, guys. We, as I mentioned at the beginning of the show, we had a chance to speak to some medical personnel from the North Dakota Medical Association, and our topic was,
helping them navigate a path to retirement. It was a lively discussion. We really enjoyed the opportunity to present there in front of that group. And, those are some of the things that we really enjoy doing. Isn't that right, Brady?
Well, I think you see financial advisors on the news and TV and everything like that. And you say, well, can they really help me? And part of what we do is take all of the little pieces of your financial picture, put them together, and come up with an actual holistic plan for all of the facets, and having someone actually be the help desk for you. And that's what we're able to do with them. So it's really fun to do, and hopefully get some of them pointing in the right direction.
I had an opportunity this week to talk to a number of people who worked in the medical profession, although, you know what, this applies to just about every profession out there. And they were saying, we really don't get much guidance on our 401k plan. They just tell us to make a selection and allocate things. And I think that's one of the neat things that we offer at Legacy Wealth Management is an opportunity for you to get in touch with us, and we'll help you take a look at your 401k plan and make some decisions about that and what direction you may want to head, and give you some, even if we're not managing the plan, we can help you with that. And of course, if you've got old 401ks or old IRA accounts lying around somewhere, we're happy to give you some education on those areas too, and help you out with all that. Hey, let's, in about a minute and a half we have left, let's have a little bit more commentary on what's been going on in the market. Guys, we're about to head back into earnings season again, aren't we?
Just about, with the end of Q1 already. Can you believe that, Paul? End of the first quarter of the year, and then we'll roll into April, and that will get us into earnings season again. So that'll be a whole new slew of information that is going to have an influence over the markets.
One look out the window, and you can tell it's spring. I mean, come on.
Not yet. And, we're still cautiously optimistic as far as the markets go. Lots of volatility. As long as that uncertainty around inflation and the Fed continues, I think you'll continue to see the volatility here going into spring.
Hey, I wanted to remind our viewers that next week we've got a special show coming up with Ed Van Hall. Brian, is that right?
Yeah, that's right. I'm going to be hosting the show.
All right.
We'll change things up with Ed Van Hall. We're going to be talking about insurance, long-term care, lots of good things on the Medicare industry as well.
A lot of people are interested in long-term care these days.
Yeah.
Ed Van Hall will be here to talk about that. Hey, just a reminder, you've been listening to Investment Talk TV. We come to you live every Sunday morning right here on ABC television throughout North Dakota. Don't forget, you can also check us out on YouTube if you want to. We'll be back again next Sunday with Brian Bruce and Ed Van Hall. Thanks for tuning in to Investment Talk TV.